Hi, I'm Alejandro Estevez-Breton, the Chief Fixed Income Strategist for Itaú Private Bank International. I attended a private wealth Washington, D.C. Metro Forum last week, and I wanted to share some thoughts. These events include high net worth investment communities, including CEOs, CIOs, research managers, investment staff across the Washington, D.C. area. It includes wealth management asset owners, single-family offices, multifamily offices, wealth management firms, registered investment advisors, and some private banks. There were 5 main issues that were discussed, and I want to share all of them. First, fixed income. I attended a panel, and I basically talked about these issues, and the general consensus was that fixed income is a more attractive asset class given relatively high yields compared to last 20-30 years, and given relatively high equity valuations. Most of liked assets were high quality and shorter term maturities. Some of them included investment grade, CLOs, and mortgage-backed securities. Regarding credit spreads, there was some agreement that they were fairly tight, especially in the higher risk spectrum like high yield. So some people commented that it was probably good to have some cash available in case spreads widened and became more attractive. Another subject that was discussed was commercial real estate. Of course, there was general caution about office and retail, but there were some opportunities raised like shed, med, and bed. Shed is referred to the self-storage, med is of course the medical industry including assisted living, and bed was referring to student housing, particularly college campuses. The third subject discussed was Bitcoin, given the recent approval of ETFs. And essentially one of the firms specialized in the subject suggested that clients should have a portfolio allocation of 2 to 5%, while some higher risk tolerance clients should have 10%. However, the consensus across the event was more focused on caution, given that most of the major players, including asset managers and brokers, had not cleared the asset class for clients. In fact, most attendees mentioned that they had only answered questions from clients but had not actively offered Bitcoin or crypto. The third subject that's really interesting is future of wealth management. There was a discussion about how 30 trillion is going to be transferred over the next few years, and women will inherit a lot of money. And it was probably a huge opportunity for the younger generations in the wealth management industry. It was discussed also that diversity was an important factor, including that young women should be able to better serve clients. Regarding AI, a greatly discussed subject is that it might actually be a productivity enhancer, not a job killer, especially because there were a lot of people retiring from the industry and not enough newcomers in the wealth management industry. And finally, a discussion that was very, very interesting regarding the macroeconomic trends in the US and the potential trends in equity markets. This was a discussion with Stephen Eisman, who profited from the shorting CDOs in 2008 and 2009 crisis, and he's characterized by his character in the Big Short movie. He sees a very good environment in the US, as he doesn't see any major issue in the credit markets, except very, very particular issues in the CRE as mentioned before. Generally, he thinks there's good balance sheets among banks, companies, and consumers. So he's very optimistic about US markets due to a secular trend of US reindustrialization over the next 10 years, which includes 3 overarching trends: onshoring, greenification or new energy sources, and AI, which includes data centers and the need to revamp the electricity grid to provide that massive need for new energy. I hope this was helpful, and if you have any questions, please reach out to your relationship manager. Thanks very much for listening.